Capital Infra Trust, which is coming out with a 1,578 crore IPO. My colleague spoke with the management about how the company plans to utilize those funds, and here's what they had to say. Listen in.
Capital Infra Trust is actually a road InvIT platform, right? So we are launching an InvIT with around 9 assets to start with. All these assets are hybrid annuity assets, right? And they are the sovereign party, counterparty is National Highway Authority of India. So those are the 9 assets we'll be putting as a part of the initial piece of it. And going forward, we have a ROFO arrangement with the sponsor where we'll be adding further more assets.
Give us a sense of the fund use that is going to be there, because you are raising around 1,077. There is an OFS of 501 crores, which I think which will go to the sponsor. But the 1,077 crores, what will be what is it going to be used for?
Yeah, so the fresh issue of 1,077 crores will have 2 aspects to it, right? The first, it will be reducing the bank debt, and the second, it will be actually used for repaying the company sponsor loan. So that will be, and the third aspect will be for some from expenses, right? For the InvIT expenses are there.
Give it the sense of the kind of debt which is there in this InvIT, and will the entire debt be repaid by this issuance?
Yeah, so I think so. As about InvIT regulation, right, you need to have a minimum 49% of leverage to start with, right? So we are proposing to have a leverage around 43%, right? And the debt will be refinanced immediately after launch through LCDs, right, which we have already captured the OD of a document, right? And then the leverage will be brought down to 43% from the current levels.
So what will be the total debt the entire assets will have, the InvIT will have?
So we are targeting around, we are after the issue, we are targeting a debt around 2,400 crores.
Okay. Sir, give us a sense of the kind of cash flows which are going to come from these 9 assets, which are primarily HAM assets.
Yeah, so see, actually, in case of HAM, right, one of the best advantage is that there is no construction risk as such, right? And there are 3 aspects to the HAM asset, the revenue that comes, right? One is that it comes from interest on the principal annuity piece. The second is the annuity payment, and third is the O&M payments, right? So those are the 3 components that we get from the NHI, right, as a revenue source, right? And then, of course, you have expenses and the interest payment to be made. So it's more or less a predictable and stable cash flow over a period of time.
Mm-hmm. You know, my understanding is, and you can correct me here, that NHA pays interest on the declining balance which is there, which is, I think, SBI rate plus 300 basis points. And as the entire payment comes down on a declining balance, the revenues also come down. I can see that from the projected revenues which you have given for FY 25, 26 and 27, where you're looking at 1,044 as revenue, and then it's coming down to 686 crores. So how do you plan to ensure that the revenues stay maintained?
No, so I think so that's the structure of the transaction and how the concession agreement designed, right? It's an amortization schedule that is a part of the concession agreement, right? So basically, whenever the annuity is paid, right, on the balance amount, the interest is charged, right? So just like a normal amortization schedule, right? So you'll see a revenue dip, right? But that's the structure that is there, right? And as we add more and more assets, right, we'll ensure that the cash flow remains stable and predictable for a long period of time. Because InvIT is a perpetual instrument, right? It's not only for the 9 assets that you are creating an InvIT, right? It's basically a growth instrument, and it will continue to grow with the new asset being added, right? So I think at some point of time, you know, you'll see the revenue being at the same level, right? Not getting impacted with the amortization piece of it.
Mm-hmm. How do you, finance the remaining future assets, which is, I think, if I'm not wrong, 17 new assets, and all of them, I think, are HAM assets. So how will you finance those?
So we have multiple strategies around that part of it. It can be through debt, also it can be through partly debt and partly equity also. So we have to start thinking on those lines, right? But I think so we are planning on the next level of acquisition. As and when it will be ready, we'll be able to give more colors to that.
This 17 assets, by when do you expect to acquire? And since it's a ROFO, will you acquire all 17, or it's going to be a part of that?
Yeah, these 17 assets will be acquired over a period of time, right? Considering the InvIT regulation, right? Where there's a 2.5 years of construction period and then 1 year of a completed revenue generating asset, right? Post that will be acquiring that part from the sponsor, right?
Mm-hmm. And how many of those assets are in operational
So
stages?
we have a size. Yeah, so as currently we have 2 PCOD which have received, right? And we have other under construction asset, right? And thereafter, there are certain which are construction yet to start. But I think so we have a good pipeline in terms of the growth piece, and this is only from the sponsor piece. But we'll also be going to the third-party market and acquiring assets which are value accretive to the unit holders.
Okay. Sir, since it's a special structure or special asset, a separate asset class, InvITs and REITs normally go by the distribution income. What is the kind of yield that you're offering to the investors?
Yeah. Well, it's, I can't disclose this, but I think so all InvITs are on the similar range, right? I think so there are natural hedge between a debt and equity, right? So of course the return will be around more of a double-digit kind of a return basically on the InvITs.
This is the annual distribution which will happen, is it?
No, it will be around minimum 2 distributions in a year because we are a public InvIT, but we have a provision to do quarterly distributions also.
Okay, and what will be the quantum of the distribution or yield that will come as part of the distribution?
So I think that's already disclosed in the OD document, right? So at this point of time, I can't speak more than that. But I think, as I told you, it's a natural hedge between a debt and equity instrument, right? So I think so the return will be much better, right? And I think so InvIT offers a better, tax optimized structure, right? So that's another advantage where, all investors, people who are paying taxes, they have a much better advantage in this case rather than any other instrument.
Okay. Just want to check, get a idea on the portfolio which you have currently. All your 9 assets are HAM assets. Your ROFO assets are also HAM assets. Is there a plan to go for other assets which are on a BOT basis so that you have a better streaming of revenues coming in?
Yeah, so I think so we have started with HAM, but I think so diversification will happen. And as things progresses, I think so we may look at BOT, right, third-party acquisition or from sponsors building that, right? But I think so there's a long way ahead, I think so, and we are here committed to grow the InvIT and develop the InvIT. So I think so that is definitely a part of a plan.
Mm-hmm. Also, give us a sense of the entire road project sector as a whole. What is the kind of tendering that has come in? Because I just want to get an idea of the industry and how road tendering is taking place. What is the kind of tendering that has taken place in FY25 so far, and have you bid for, or the sponsors have bid for any of the tenders?
Yeah, see, I think the last year has been a bit slow, right, because of the elections part of it. But I think now it's picking up, right, and government has released around 54 projects on BOT, right, of 2 lakh crores basically, right. So there's a bidding process that's starting now. I think so we'll see more development happening this year basically. But I think so India has the largest second network in the world, right? India is the second largest network in the world, road network in the world, right? So the potential of growth on road and highway sector is huge compared to the other infrastructure sectors if you look at it. And in India, if you look at, there are 11 InvITs only in road sector currently, right? Than any other sector, right? So there's a lot of potential. I think the government is working, the policies are very favorable, right, for growth of it, right? So I think overall it's a very good sector to be in, and InvIT will flourish in this sector basically.
Mm-hmm. One of the key risks that is there in HAM-based InvITs is that if the interest rate regime goes down or it reduces, it also reduces the outflow from NHI because their interest payments also reduce, and that way your income also comes down or revenue comes down. How do you plan to hedge that kind of interest rate differential or interest rate risk which is there?
Yeah, but if you look at it's a natural hedge, right? Because if your interest rate goes down, I think your cost of debt will also go down, right? So I think so to that extent, you can naturally hedge that part from 50%, right? But of course, yes, there will be ways and means to develop the cash flow. And as you grow, right, I think so that should be a natural part of the process basically.